I want to give you another option for calculating the income tax, which is based on the chart that I provided you in OpenLMS. We're going to look at that chart as well as look at a few things from the textbook so that you can see the differences between the two. So let's first look at how we calculate income tax. So when we're calculating the income tax, the first thing we need to do is to determine the adjusted gross income, which is done exactly as it is in the textbook. Gross income minus adjustments. Then we're going to calculate the taxable income. And this is the first difference that you'll see in calculations that you'll do in this class versus what's done in the textbook. The taxable income is the adjusted gross income, or AGI, minus, now the textbook says exemptions. Well, exemptions for federal income tax and the North Carolina state income tax have both been eliminated. There is only deductions at this point. So we're going to do the appropriate. We're going to subtract the appropriate deductions, either the standard deductions or the itemized deductions if they turn out to be more. Once you have your taxable income, you calculate the amount of the income tax by taking a tax computation, which is based on your AGI and your filing status, and you subtract the tax credits. It's this tax computation part that will end up being quite a bit different than what's in the book. But let's go ahead and start to look at the main differences here. First is this is the chart which is provided to you in the textbook. And you have, in order to use this chart, it only gives you the ranges for each tax bracket. And so you have to calculate an amount of tax for each individual tax bracket up to the one that the taxpayer is in. To get to the chart that I provided you in Moodle, you just need to log into your Moodle page, into our course, scroll down to Unit 3, and right below the table of assignments, Unit 3, you'll see the 2020 income tax information. So you click that link, and it opens up a spreadsheet that has a table for each individual different filing status. And then for each bracket, there's just one series of calculations that you have to make for that tax bracket. So for example, if a person was making had taxable income of $100,000, they would only need to do the calculation for this line here. That's a single easier calculation than making a calculation here and another one here and another one here and another one for each individual level. So let's see how we would do that for the example that's included in the textbook. We're going to do example 2 that's on page 507. And this is an example for a single woman with no children, no dependents, who made $62,000 in gross income, had an adjustments of $4,000 because of deposits to an individual retirement account. She also had deductions that are listed here. And finally, she had a tax credit of $500. So as I said, finding the adjusted gross income is the same as it is in the textbook. You just simply subtract the gross income minus the adjustments. Her adjustments in this case are $4,000. So she's going to have a taxable income of $58,000, or I'm sorry, an adjusted gross income of $58,000. The next thing is to determine the taxable income. And this is the first little change we make. Basically, the exemptions is $0 right now. So we need to determine whether her itemized deductions are more than the standard deduction. The textbook does the total of her itemized deductions. She doesn't get to use her medical expenses because she didn't have enough medical expenses. So her total itemized deductions would only be $12,100. But if you look at the chart, a single person can take a standard deduction of $12,400, So it's better for her to take the standard deduction than to take her itemized deductions as they did in the textbook. So here's the first change. So let's start the calculation there. So to calculate her taxable income, we calculate her taxable income. You take her AGI, her adjusted gross income, and subtract the appropriate deductions. And remember, her adjusted gross income turned out to be $58,000. And she had $12,100 in itemized deductions, but the standard deduction is $12,400. So she's going to take the standard deduction, and that ends up with a total of, just going to do the calculation here real quick to make sure I have the right number. $45,600. So that is her taxable income. So now we need to see which bracket that puts her in. Now we're going to go to our income tax table in Moodle. This was a single person, so we used the first table. And notice that $40,600 falls into the 22% marginal bracket. The marginal tax is the amount that you pay on the very last part of your income. In this case, for this lady, it is 22%. So we're going to take 22% of whatever the amount over $40,125 was, calculate that amount, and then add $46,750, which is basically the total of the taxes for all of the money less than $40,125. All right, so let's go back and finish our calculation now. So her taxes, let's do her tax computation first. All right, so the first thing you need to do is to figure out how much she had over $40,125. So we take her taxable income and subtract $40,125. And that gives us $5,475. So that's the amount over 4025. So now we're going to multiply that by 22%, which we have changed to a decimal. And so that gives us $1,204.50. So that's her tax on her last little bit of her income. But we also have to pay the taxes on the first $40,025, and that was the amount that we had in the table. If we go back and look at the table again, we can see that we need to add $4,615.50 to that final amount. So going back to our calculations again, we just need to add $4,617.50. And that gives us her total tax computation as $5,822. All right, so remember that her taxes then are this computation we just did minus her credits, which were $500. So her total taxes are $5,322. I hope that makes the tax calculations a little bit easier for you to do. And remember that you can come back and watch this video any number of times in order to see how to do that.